This is one of the real sort of dynamics here that's important to recognize on two fronts. One is because of the implications for spending, and also because of the implications for credit quality and for releveraging. And so on slide 23, basically this is a snapshot from the beginning of COVID through March of this year. How much did aggregate net income change? And the answer is by plus $1.8 trillion. Meanwhile, how much did total spending change over that same time frame? And the answer is it went down by $600 billion. So you put those two together and you basically have an excess savings number of about $2.5 trillion, $2.4 trillion. And this is a chart that Christian Drake puts together. I think it's one of my favorite charts of all time. But anyway, the point is obviously profound. So people are essentially sitting there on the sidelines now with about 2.4 trillion in excess savings versus where they were a year ago. So think about that. And then if you go to slide 24, this is sort of where this is all headed. So expectations are from the consumers themselves that they're going to increase their spending. And so that's not a surprise. There's a book out there called Apollo's Arrow. And one of the things Apollo's Arrow talks about is this idea that pandemics are new to us, but they're not new to our species. And if you go back over hundreds or thousands of years, there's actually a rich history of humanity's exposure and experience with pandemics. And one of the things it finds in the historical record is that when you emerge from pandemics, when you come out into the post-pandemic period, people tend to YOLO. They basically spend, fertility rates go up, they travel, they do all the things that they've really been unable to do. And then they're also sort of imbued with a little bit of a new framework on life, meaning maybe the things I thought were important before aren't as important, and maybe there are some things I should be doing that I haven't been doing. And so anyway, a lot of that ends up transferring into increased spending. And so you can see that very clearly on display on slide 24.